Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thank you very much for listening to my video today, and as usual, please don't forget to like this video and subscribe to my channel. That will be really awesome. Thank you very much for listening. So without further ado, in today's video we're going to talk about what happened in the market last week. And I'm also going to be talking a little bit more about how our portfolio fared and any key updates and any things that happened in the news. So I shall get started. So it was a very good week last week for our portfolio. It was up about 5.2% up from the previous week, which was a very good result. If we compare that to the other benchmarks, if we look at the NASDAQ, that was up about 2.2%, and the S&P 500 was up about 4% for the week. The FTSE 100 was up about 1.12%, and Bitcoin was up about 4.7%. So the reason why we did pretty well last week was that it was a strong week for US and European markets. Our portfolio was dragged a little bit down by the Chinese market slump, and I'll go into a little bit more detail in a moment about why we had that slump in the Chinese markets. And however, it was offset by some really good crypto performance last week. Both Bitcoin and other altcoins did extremely well last week and have bounced reasonably well recently. We also did a lot of short-term trades last week with a lot of success in Adidas, the Spanish index, as well as natural gas. I also did quite a lot of currency pairs, such as the US dollar, Japan currency pair, also the US dollar, Swedish krona currency pair, OLO, WAMOB, and yin. I did both short positions and long positions last week, so I was able to go with the markets, whether they went up or down, and make some good short-term profits. However, I did have one negative trade last week, and that was in Dogecoin. I've actually been quite successful in finding good times to short Dogecoin. However, after two profitable trades in Dogecoin shorts last week, I did take a third trade, and as we know, Doge went a little bit crazy last week and has risen very fast, more than my expectations, and we did get stopped out on that position. So just in order to have some transparency, we did have a negative trade last week. However, our short-term strategy of making these short-term trades work out very well for us over the whole year, and I can continue to do that with just a small portion of my trades, of my portfolio. Also, I managed to close out a longer-term position that I had in Adobe at about 15%. Which was good. I took that position after they made the acquisition in Figma, which caused the share price to go down because a lot of people said that that acquisition was overvalued. However, Adobe has bounced back pretty well since then, and I thought it was a good time to take the 15% profit. If we look at 2022 benchmarks sake, our portfolio is down about 35.5% overall for the year. And if we compare that to the NASDAQ, which is down about 29%, and the S&P 500, which is down about 18.2%, we will also see that Bitcoin is down about 55.70%. So if we look at that, I'm obviously underperforming against benchmarks such as the NASDAQ and S&P 500. However, if we look at the performance of Bitcoin and cryptocurrency, with Bitcoin down about 55% and a lot of the altcoins between 80 and 90% down, our portfolio has actually fared very well considering. And it must be noted that we have a lot more upside potential than a lot of those indexes, as has been seen over the last couple of years that we've had in the market. So please stay patient. Our portfolio is starting to improve. And I do think that going into the end of the year and the beginning of 2023, that we're going to have a lot of success. If we look at the main news from last week, well, as I said, we had a much stronger week from US stocks. And a lot of that was kind of caused by some sentiments that the US Fed may start to slow down those interest rate hikes after the next Fed meeting. So reason why there's a lot of optimism is around Canada last week. They raised their rates by just 0.5%. And Canada is often a kind of a testing ground for the US. And by them just raising by 0.5%, it's started to rise expectations that after the next meeting, which the market is expecting a 0.75% increase, that as we kind of move into December and January 2023, that they could start to lower those interest rate rises. And it doesn't necessarily mean that we have to stop interest rate rises in order for the markets to bounce back considerably. I think just reducing the rate hikes will do a lot for the market moving forward, and it will send a clear signal that they are starting to slow down those interest rate hikes, and eventually they could halt interest rate hikes altogether and may even start cutting eventually. However, there were some tough earnings reports last week that came out. So we saw results, poor results actually from Meta, as well as Amazon, Microsoft, and Alphabet. Meta in particular was a very poor earnings report. And it was seen that they spent a huge amount of money in the metaverse project. And those costs of that metaverse project are continuing to increase. And Meta have a lot of problems at the moment with the kind of declining business in Facebook, the original Facebook site. Obviously, Instagram and WhatsApp are doing quite well. But this metaverse project is going to take a lot of time for them to start to reap the benefits and also start to get a return on investment for Meta. Elon Musk also completed last week his Twitter deal, and they're actually turning Twitter private, and this is seen as very good for kind of Twitter overall as a platform. They've had a lot of problems with bots on the Twitter website. And I think that Twitter should be much more usable after this. They did fire the original CEO straight away and the CFO on completion of the deal. So I think Elon Musk's plan is to turn Twitter into a kind of town square website, which basically people will be able to air their thoughts and have an open discussion, and that nobody will be censored. They're planning to let people back, such as Kanye West, also Donald Trump. So they want to make free speech a lot more open on the new Twitter. Also, the US manufacturing activity fell into contraction territory last week, and that is for the first time since June 2020. So we are starting to see that kind of easing up in manufacturing activity, which could be caused by reduced demand. We also saw pending home sales fell 10.2% in September, and that is the sharpest monthly drop since the pandemic. And actually, this could be kind of span as positive news, because as we know, inflation data has been very high over this whole year. And one of the key aspects of the last inflation CPI reading was to do with accommodation or shelter. And as these home sales start to kind of fall, we should see a fall in the price eventually, and this should help to ease inflation somewhat. We also saw the European Central Bank has raised its interest rates for a second consecutive time by 0.75%. The rate is now at 1.5%, and this is actually the highest level that it has been since 2009. There's a lot of murmuring from Europe. It has been known that they're looking at the economic data at the moment in Europe, and they're saying that the economy is starting to slow down significantly and going into a recession. So there's a lot of talk about whether they can continue to increase those interest rates at the rate that they have been doing that over the last kind of couple of ECB meetings. So they could as well in the future look at potentially pivoting. However, I do think that over the next couple of ECB meetings, they will increase their interest rates. However, they may start to slow those down in a couple of months' time once they've got a better grip on inflation. We also saw business activity in the Eurozone has been contracted for a fourth month in October. So we are seeing a slowdown in business activity in the Eurozone overall. We also saw another UK Prime Minister, and that is the third of the year after our friend Boris Johnson and Liz Truss resigned a few weeks ago. So the new Prime Minister is Rishi Sunak. He used to be the Chancellor of the Exchequer under Boris Johnson, and he has actually been received fairly positively from a business sense and an economy sense, and they're currently trying to prepare their budget, and they need a little bit longer to do that. I think it's going to be released in a few weeks, so we will wait with bated breath how that goes. But if anything is to go by what's happened in this year, it has been a very tough year overall for the UK. We've also seen a drop in the markets last week, and this was in China, and this was due to a number of different reasons. So one of those is COVID related. So they've had more COVID cases throughout China, and they've had lockdowns in specific cities in China where they've had really high rates of COVID. They're continuing with this COVID policy, and to be honest with you, this is reaping havoc on China growth, and the growth rate in China is continuing to slow. And one of the reasons, again, is that Xi Jinping has embarked on a third 5-year term. And this has been seen as fairly negative for the markets overall. One, because of this COVID zero tolerance policy, and they've closed down a lot because of COVID. And the other thing is because Xi Jinping has a very tight hold overall on the government, and it is seen that because he is so close with a lot of the government officials, that they are really kind of a puppet to him and his policies, which haven't been working very well over the last couple of years. As we move on to the top 3 performing stocks of last week, and the top performing stock of last week is Dana Holdings, which was up about 20.78%. And that is on the back of a very good earnings report that they released last week, in which they beat estimates, which was very good. The second best performing stock for last week is Medical Properties Trust, and that was up about 13.41%. And the third best performing stock for last week was ASOS, which was up about 12.35%. And although it has been an extremely tough year for ASOS this year, with the changing of the CEO and increased costs of materials as well as supply chain bottlenecks, they have seen a nice bounce back off their lows. If we look at our death by charts edition, I'm going to be running through a few charts. So the chart to the left is the US Federal Reserve total assets, so kind of the balance sheet. And as you can see, they have done some good balance sheet reductions, which hit the peak in April, and it's actually been down 242 billion since it hit that peak. So they have been doing obviously a lot of fiscal and monetary tightening. If we look at the federal funds rate, which is basically the interest rate, as you can see, they've obviously continued to increase those interest rates. We started off in March at about 25 basis points hike, and then in May was a 50 basis points hike. In June was a 75 basis point hike, and in July it was another 75 basis point hike, and recently in September was another 75 basis point hike, and we're currently at that kind of 3.25 federal funds rate. It is expected in the next meeting, which comes up in the next couple of days, that they are due to increase their interest rates by another 75 basis points. And then the markets are starting to price in after that there'll be a 50 basis point hike, followed by a 25 basis point hike. So kind of a slowing down of those interest rate hikes, and then kind of nearing that kind of 4.5 to 5% interest rates before a potential pivot. So that's what the markets are pricing in at the moment. I also wanted to show you this really interesting chart, which shows that the average year-end PE ratio for the S&P 500 since 1989 is 19.6. We entered this year 17% above that level, and we're currently 3% below it. So obviously it showed that at the end of 2021, the markets were very overvalued, had very frothy PE ratios, and now we're starting to see the opposite, where we're now below those average PE ratios and currently 3% below it. Have we hit the absolute bottom of the S&P 500 for this year? Only time will tell, but a lot will be dependent on what happens with these interest rate hikes and the inflation figure. So as we move on to the crypto news and views, Bitcoin actually has been doing very well over the last couple of weeks, and is now at about, it's kind of been hovering between that 21,000 range, and Bitcoin's actually hit its 6-week high a few days ago as well. So Bitcoin has held up extremely well, considering the macro environment that we have been in. We kind of hit that low in a few months ago in Bitcoin, and since then we've been really ranging between that 18,000 low to kind of 24,000, 25,000 for a long time. But we're starting to creep up from the lower part of that zone to the higher part of that zone. So it'll be worth watching over the next couple of weeks. One of the key things that I just wanted to outline is that there was a warning from Core Scientific, which is one of the largest public Bitcoin miners, and that they said that they're going to find it extremely difficult and they're going to stop making some of their debt payments. And this is mainly because the Bitcoin mining sector has really struggled, especially over the last couple of months, for two reasons. So one of those is that the Bitcoin price has been very low. So when they are selling off the Bitcoin, they are not achieving really good rates for selling those Bitcoins into the market. Second of all, the mining difficulty and the hash rate is extremely high at the moment. So if you think about all these miners, they're basically they're mining for Bitcoin, and the difficulty is extremely hard for them to be able to get a block reward. So there's a lot of competition, and the Bitcoin price is quite low for those Bitcoin rewards as well. If we also look on top of that, we have really high energy costs as well. This is extremely difficult for the Bitcoin miners. However, on a positive note, they did sell off the majority of their Bitcoin about 6 months ago. So they have very little Bitcoin left in order to sell off, which is generally good for the Bitcoin price because there's less selling pressure. And I think that this is the case for a lot of miners. It will be a bit survival of the fittest, a bit of Darwinism over the next couple of months to see who survives from the Bitcoin miners. We also saw Dogecoin rally significantly, actually increased by 150% in just 4 days. And this was sparked really by the Twitter acquisition completion by Elon Musk. And there's a lot of talk about Twitter potentially integrating Dogecoin overall into Twitter for payments, for tips, and some other things. However, nothing has been officially released. I do think Dogecoin again has got very overvalued, and I did place a short position in Dogecoin at a strategically bad time. However, I do think Dogecoin again will go down over the next couple of weeks back to its kind of mean level. We also saw Sam Bankman-Fried, who is the CEO for FTX, one of the largest Bitcoin crypto exchanges, and he has actually published a draft of a suggested regulatory framework. So he's very involved in regulatory frameworks and talking with a lot of the different US regulatory We also saw Sam Bankman-Fried, who is the CEO of FTX, which is one of the largest crypto exchanges, and he's actually published a draft of a suggested regulatory framework. He's very involved with the government agencies and talking about crypto regulation. However, it wasn't received very well by the crypto community because some of the things that he put in place was about the regulation of DeFi and obviously decentralized finance. Just by its very name, by its very nature, it doesn't go down very well in the community when you talk about regulation. We also saw the Cash app is now allowing people to send and receive Bitcoin via the Lightning Network. The Cash app is obviously one of the largest apps in the US for transferring money. So to be able to use Bitcoin via the Lightning Network is a good advancement. There's also been some talk about the UK potentially becoming a crypto hub. And that is because the new Prime Minister, Rishi Sunak, is very pro-crypto. And he has before suggested that there could be some, potential regulation improvements in order to welcome crypto into the UK. We have also seen Aptos are releasing the capabilities to be able to perform and to hold NFTs on the chain. And this will be a good testing of scalability of Aptos. Aptos has obviously boasted about very large transactions per second. However, the amount of transactions on the network has been very low and has been slow in its kind of rollout. And it will be very interesting test to see how Aptos performs as more things roll out on the chain and it becomes busier. We also saw the Blockchain Association has filed a supporting brief to the Grayscale Bitcoin ETF appeal. As you all know, and as I mentioned a few months ago, Grayscale's Bitcoin ETF for a spot ETF was rejected a few months ago. And they have actually launched a legal case and appeal against the SEC in order to try to get that approved. So there's a lot of people kind of jumping in, major organizations jumping in behind them to try and lobby to get a Bitcoin spot ETF approved. As we look at the Bitcoin charts now, and I really wanted to say by this chart that both liquidations can happen both to the upside and to the downside with leverage. So as the Bitcoin market went down in 2022 and crashed off those highs and continued to go down, there was a lot of liquidations of people that had long positions with a lot of leverage, and that caused a lot of volatility, especially to the downside. But that can also happen on the other way round as well. So over the last couple of months, there was a lot of short positions that were building up, and that is because shorting Bitcoin and crypto had become a very crowded trade. And what happens is that you when you kind of hit these lows and there's either major news in the market or there's a lot of buying pressure, it forces these traders to have to cover their short positions, and you kind of have these short squeeze up and these liquidations going the other way. So last week we saw $315 million worth of short liquidations in just 4 hours. I think it's pretty good overall for the market as some of these leverage participants get squeezed out of the market. And I think we are seeing continued buying pressure, and we're seeing really good signs that Bitcoin may have already bottomed in this cycle. So we will look for continued recovery over the next couple of months. So thank you very much for listening to my video today. And also don't forget to join my Discord group. We have a really awesome community of people regularly chatting on there. So if you haven't joined already, now is the time to do so. Link is below in the description. So have a great week ahead, and I will speak to you all soon.